Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of pound dollar GBP USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 1 hour chart of GBP USD. My dear friends, just like the video of Euro USD and Gold USD, I will not make this video long. I will try to keep this video short. Okay. So let's jump to the chart of DXY. Yes, US dollar currency index DXY was very flat, choppy, sideways during the whole week, and we did not see any big move. DXY's next resistance is around 107.20, and during the last trading session on Friday, DXY just closed below the resistance zone here. So Monday, we'll have to watch what DXY does after the market opening. If the volatility remains same, then we can expect the market to reverse from 107.20. But in case we see good amount of volatility, unlike the past week, we will get to see DXY breaking the resistance and going up, because after all 107.20 is not a very strong resistance for DXY. The next big resistance for DXY is around 107.60 to 108 level, because of previous support to act as resistance, as well as we have got 200 moving average. So this is the next big resistance for DXY. So Monday we will have to watch DXY, okay, whether it is able to break the resistance or not. If it breaks it, then we will see correction on the GBP USD. Okay, but one thing that we need to focus here is that though DXY chart is not much positive right now, but DXY is not breaking the previous lows here. It is constantly forming higher lows. Okay, so there is a possibility that in the coming days DXY may break the resistance and go up. In case of big fall, hopefully remember that 105.30 is the next big support for DXY. And I've talked about DXY. Now let's head back to GBP USD. Okay. So if you look at the higher time frames of GBP USD, then you will not find any proper answer. Just like the chart of Euro USD or gold, okay, we do not have anything revealing kind of thing on the chart of GBP USD on a higher time frame. So this is the only thing we need right now. If you have watched my previous video, then hopefully you know it very well that right now GBP USD is sideways. Yes, market was trying to recover, there was some recovery on the market, but if we simply focus on the present trend, then we can easily see that market is sideways right now. So accordingly we will have to trade. Sideways market means number of buyers and sellers are almost equal. Nobody is dominating the market right now. So as a result, in a sideways market, the safest trading strategy is to buy at support, sell at resistance. Simple. So if you're trying, or if you're planning to take any position here, then let me be very clear, it can be very risky. If you're a beginner, new trader, if your capital is less, you are in a very tight spot, then in that case you should strictly avoid placing trades between the chart. You should only trade at good levels. So if you're planning to trade place any trade here, simply drop the idea. But if you're an experienced trader, then you can follow your own strategy. Okay, so my dear friends, after the market opening, also wait for the market to either go up or either go down, so that your risk to reward ratio is not compromised, so that you do not gamble with your hard-earned money. So if market goes up, observe the market around this level area, 1.2000. okay, around 1.2000. Considering the previous price strong price rejection from above, high chance that market will be reversing from here. So if market goes up and reverses from this level here, if you see price rejection from above, you can definitely go for a sell position considering the present sideways market. Okay, around 1.2000, good amount of sellers are present, so we can expect the market to reverse again. If it reverses, go for a sell position. On the other hand, the best support on the chart of GBP USD is around 1.1740, 1.1720. So if market comes down to this level, definitely you can go for a buy position, because this is a good support. So if market takes support, if you see market bouncing, if you see market taking support, then only go for a buy position. Keep in mind that no level is permanent in the market. As a result, it's our duty to protect our capital, hard-earned money. So once market reaches the level, observe the market. If you see the market is taking support, then only go for a buy position. If you see the market has come to support with a big red candle, do you think that you should click on the buy button? Obviously no. Okay, so these two are the good levels for the market, but in between the two levels here, you can also see I have also drawn a trend line. Okay, so to be honest, the trend line is not a sure thing right now because we have simply two touches. Okay, we simply have two price levels right now. So if market comes down on Monday, observe the market around the trend line. The trend line is a dynamic support, so as a result we do not have any exact figure, but you can expect it to be around 1.1800. okay, if you see market coming down to this level, if possible try to draw the trend line, okay, and just observe the market. If you see the market is trying to take support around the trend line, if you see market forming a hammer pattern, if you see market showing price rejection from below, you will get the confirmation that the trend line is a support, valid support in the market, and you can also go for a buy position at the trend line as well. So this is it. Hopefully you've understood. See, this is my analysis. I can be wrong as well. No trader is 100% accurate in the market. So please do not gamble with your hard-earned money. Okay, please follow proper risk management. Take position according to your capital and stop loss. Okay, if you're not sure how to take position in the market, then please try to use the position size calculator. Position size calculator is a game changer. And one thing I would like to request to everyone is that, see, you must be very flexible as a trader. If you're a trader, that it doesn't mean that you'll have to trade each and every day. You will have to place trades 4 to 5 trades each and every day. You need to be flexible. After all, see, it's all about protecting the capital and making money at the same time. If the market is not favorable, if the market doesn't look good, and if you still keep on placing orders, then obviously you are doing something bad. You are gambling with your hard-earned money. Don't do that. For example, this week, okay, this week was not a very good week. Okay, overall the market was flat. Okay, it was like a pre-Christmas celebration, because during the Christmas market usually remains flat, and market almost behave like that only. Okay, so we can't help it. If the market was flat, then it was flat. Okay, you cannot take a position forcefully. Many of you have sent emails, screenshots in my WhatsApp number that I'm losing money, what can I do? See, market was not favorable, you can't do it. See, keep in mind, your market is not going anywhere, so please wait for the right opportunity. This is the main difference between a trader and a gambler. Bye bye, take care.